Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today is February 20th, 2025. And today on our call, we have back the CEO, Doug Dyment from Gatekeeper Systems. Gatekeeper trades on the TSX Venture Exchange under the symbol GSI, and it also trades on the OTC under GKPRF. The company is currently trading at 55 cents with about 94 million shares outstanding, or about a $52 million market cap. I'd now like to hand it over to Paul Andriola.
Hey, thanks a lot, Trevor. Doug, it's been a long time since we spoke. Great to have you back. Gatekeeper is a company we've known for a long, long time. And, we thought it was time for an update. So you've been very busy this past year. I know you're busy right now, so you've taken some time to get this updated. So let's do that. Before we actually get into an update, there's a number of sort of new members here that might not be familiar with the story. So why don't you give us a brief sort of description of the business, and then we get up to some updates.
Yeah, sure. I'd be happy to. Well, Gatekeeper is a technology provider focused on transit, K-12 market, and smart city. And our USP, our unique selling proposition, is protecting people in transit. And what we do to accomplish that is we install video integrated with voice and vehicle sensors, license plate reading capability on these vehicles. And then we move that data back up into the cloud, and we manage the data that we collect out at the edge. So at the end of the day, protecting people in transit really means putting these technology platforms on trains, city buses, and K-12 school buses, as well as other city vehicles. And yeah, it's been busy, like you said. We've recently, in the last few years, broken into the transit market, and one of our key customers, being SEPTA, Southeast Pennsylvania Transit Authority, has recently, as of last year, issued a substantial contract to us to upgrade all of their MDCs, or mobile data collectors, to collect this evidence out at the edge. And for some of your viewers who are new to Gatekeeper, you might not realize that an agency the size of SEPTA, the video is really important to them. They save about $20 million a year in false liability claims. So the evidence that we collect out at the edge for them, and then move it back into the network where they can manage that evidence, and it's really important. So protecting people in transit, that's what we do. Our technology platforms are widening, and we're delivering more revenue per bus or per vehicle. And that's one of the main reasons we're seeing the growth in our revenue, top line and bottom line.
Perfect. No, I appreciate that. So let's talk about some of the updates. We've seen a number of contracts announced over the course of the last year, and some other sort of innovations, I guess. Let's talk to what's happened over the last year.
Yeah, sure. Well, first of all, our strategy is to get more intelligent out at the edge when we're dealing with high resolution video, as an example. We want to be able to make smarter and smarter decisions. So we've implemented some AI technology that allows us to do that. A recent contract announced just last week or so with Toronto Transit. That was a big win for us. It's unique application using AI. It's called ACES, which stands for Automated Streetcar Enforcement System. And really what they're trying to do is they're trying to protect people when they're getting off and on these trains downtown. And lots of individuals have been struck by cars. Cars are supposed to come to a stop either in the front of the train or the back of the train when people are onloading and offloading. So our technology is, we went head to head with a few competitors. We were the only company that was awarded. They were going to award two companies and run a pilot for approximately 9 months. And size of the contract was about $460,000, and we were the only company that was able to solve the issues. So they awarded the entire project to us. So we're really excited about that because it gives us access to now the third largest transit agency in North America. So that kind of layers on with our SEPTA business. And then further to that, we've also landed approximately 60 different transit customers throughout North America. So there's more and more people are starting to just understand our technology as we accelerate our go-to-market plan in that market. So transit business has been quite busy last year. I'll talk a little bit about the train market as well. Gatekeeper is spec'd. Our technology is spec'd on SEPTA trains, and there's been some new train RFPs won most recently by second largest train manufacturer in the world, which is Alstom. And we're in final negotiations with them to basically come under contract with them. So we're really excited about that. That potentially opens up, global distribution for us once you get into their train network. And there's another line that was just awarded to Hitachi. So we're in talks now with Hitachi. So the train business is quite interesting because you're not looking at $3,000 or $4,000 a train. You're upwards of $30,000 in some cases per train, depending on the product mix. So we're excited about the train business. We're excited about the rubber tire business in transit. And then the K-12 side has been real busy as well. I'm gonna bring up our presentation here and show you some of our revenue mix in a few minutes. But K-12 is busy. We've got over 3,500 customers in that market, and protecting kids in and around school buses is that's a top priority of these districts. In fact, just recently there was a new legislation or a new law passed by Transport Canada. We just put this press release out yesterday, and really what it means is that between 2027 and 2036, there's going to be an estimated 65,000 school buses that would have turned over into new school buses, and all of them are going to be mandated to have video, in particular a 360-degree system that is able to see in all the blind spots and communicate to the driver, thus adding another layer of safety for children, getting on and off of school buses. And I don't know if I may have mentioned this last time we spoke, Paul, but there was a child that was killed last year just going underneath a bus to get a football or a soccer ball or what have you. And the bus driver didn't see him and left the scene, and unfortunately the child was killed. And this type of technology has the ability to stop that from happening. So I'm really excited that Canada has mandated this, and that's just an indication of the importance of this type of technology to save kids' lives.
Fantastic. So let's talk about sort of the go forward plan now. What does business look like going into 2025? You mentioned some RFPs that you're dealing with. How else can an investor sort of look at where you guys could be by the end of the year?
Well, it's 2025. We first of all, I mean, 2024, we had a good solid year in 2024. I'm trying to grow the business by about 20% per year. We were about 36% growth in 2024. August 31st is our fiscal. We were about 37.8 million in revenue, up from about 28 the year before. And operating profit was around 4.2 million, and working capital was 6.6 or 6.7 million with no borrowed money debt. And we had cash and cash equivalents about 6.7 million. So we came into, and by the way, Q4 it was a record quarter of about 11.7 million. So it was quite brisk. And then we came into Q1 with quite a bit of momentum. even though we did about $7.3 million, but it's interesting with that quarter because investors compared it to the quarter before last year, and we had announced in 2024 Q1 that we had landed a significant project at SEPTA, and Q1 was going to have about 3.2 million in revenue. So if you look at, if investors wanted to compare those two quarters, I'd suggest you carve out that project and then look at kind of what the base revenue was, and you'd see there was about a 15% increase in revenue between the quarters. So the business is 2025. We're optimistic about it. We're projecting higher growth in 2025 than we had in 2024. And if I look at our sales funnels, just the transit market alone has projects in it that are well over 100 million. So we're seeing the project mix has got me quite excited, right? Because we have a K-12 market that has a lot of customers, but the deal flow can be sometimes a little bit smaller from a revenue standpoint than the transit market. And the transit market, it's there's some large projects in there. So I'm hopeful in the near future here that we're able to announce some of these larger projects that we're working on. And even though we are we're projecting more growth this year than we had last year, depending on the timing of some of these things coming in will dictate what the quarters look like. And that's kind of typical with our business. Our overall play this year is really to focus on put a bigger focus on the train market, because there's a new FRA ruling out that every commuter rail has to have crash hardened memory module, forward facing camera, and Gatekeeper has a complete suite that meets the FRA ruling, and we've implemented it at SEPTA, and we're bidding some significant projects in rail. So we're really excited about the relationships that we're building with the OEMs, because that gives us access to new train builds, but also the retrofit market has significant upside for us. So we got a big focus on that. We're hiring some specific individuals that know that market well, and we're starting to see we're starting to get some traction there. On the K-12 side of the market, we're still adding more products to our platform as a service business model. We just recently, for some of your new listeners or viewers, we recently, in the last 12 months, 18 months, we launched a new data center in Philadelphia. And our overall plan is to get as many of these mobile data collectors out in the market as we can, and then develop cloud-based software applications to monetize the data. And we're starting to do that, right? So we're starting to execute on that vision that I have of becoming a data company. And video, like I said, if you look at SEPTA and you look at our school district, base of customers, being able to provide management services, for the video that we collect is, I think, has got a huge growth opportunity in the future. So that's why we invested in the data center, and we're starting to drive recurring revenue. So I'm quite optimistic that over a period of time that the market sees us as more of a data play than just a system solutions play.
That was going to be one of my next questions here, specifically about sort of that recurring revenue piece. It's relatively early, but kind of what percentage of that 38 million, call it, last year was recurring revenue?
Recurring revenue out of the 38 last year was about 2.7 million. So you're right, we're just getting started. I've got a slide here, if you can bring up there, Trevor, to speak to the revenue and the profitability, and the investors can see. I don't know if they can see the slide.
You're controlling the slide, so I think you should be able to just click it and go to the next slide.
Okay. How's that? Can you see that?
Yeah, there we go. Yeah.
Okay, there we go. Okay, so you can see that in fiscal 2024, we've got 37.8 million in revenue. 2.7 million is on the recurring side, and then 12,500,000 or so is really in the gray box there is our transit revenue. And then school bus is 22, about 22, a little over 22 million. So you can see in the yellow boxes that we are, school bus has been a really consistent provider and growing nicely. And transit is really starting to pick up. So we're optimistic about that. And then you can see how the net income is growing. So we've been able to keep debt out of the company and not dilute and really invest every dollar back into the business. And I think the results are quite positive.
Very good.
So this slide here shows how the mobile data collectors are growing, and you can see that the yellow is really the mobile data collectors that are represented in the K-12 market. So it's all school buses, and then you can see how in the gray box there we're now up to about 4,000 MDCs installed on transit buses and trains, and approximately 53,000 MDCs installed on school buses. So a total of about 57,000. And we feel like we've got about 10% of the school bus market, an estimated 500,000 school buses. The market is just starting to turn over to wireless, and that's really exciting because we're developing these applications that can now talk to our devices out there. And I see just a big opportunity. I'm going to talk a little bit about how the fixed site, the vision of integrating fixed and mobile, especially in the K-12 side of things, I feel is going to be a big opportunity. So that gives your viewers a little bit of information on how many of these mobile data collectors we have in the market. One mobile data collector per vehicle. Think of it that way. Every one of those mobile data collectors is collecting about 30 days worth of video. And then all of the incidents are then clipped on alarm and can be pushed back to our server. And then we start charging. We're charging about $29 per bus per month for live viewing and health check with built-in AI. Health check is basically a feature that allows us to automate the health check of the health of monitoring every one of these MDCs. Because in a school bus application or a train application or a transit application, rubber tire, it's not like fixed site surveillance where passengers don't have access to the cameras. They do, so they can do some funky things and the system thinks it's working, but it's really got Vaseline blocking the image, and we built some of our own technology, our AI, to be able to clip video on that type of an alarm and be able to get this problem solved before the big issue happens, which is missing video on incidents. That's one of the biggest problems. And then if you look at the saturation of our customers, this is a really cool slide because it shows where the 3,500 customers are. And by the way, all of the OEM vehicle OEMs and now some of the train OEMs are endorsing us, right? So we really feel like that's going to drive even more business. So that's a little bit of information on MDCs, what the revenue looks like, and what the customer saturation looks like.
Perfect. I appreciate that. A reminder to everybody that's listening, of course, if you've got questions to ask Doug, please just use the chat function. We'll make sure that happens. I see there's already a couple questions there. Doug, you sort of led us on a little bit about some new innovations and stuff like that. Maybe let's talk about your new initiatives. What are you excited about in 2025 in terms of some of the new things you're looking at?
Well, we've introduced some new products that have built-in AI and excited about those. It's a passenger protector that has built-in, or I should say, the pedestrian protector that has built-in AI, and that is able to look out a little bit farther outside the vehicle and then communicate back when a person is in a really tough spot that could be in a dangerous situation. So adding AI to our platform and then being able to drive more revenue, more safety systems, we're excited about that. We're making investments on the sales team, engineering team, both on K-12 and transit. The thing that's kind of got me most optimistic, because the K-12 market is going to, I think it's going to continue to have steady growth because the technology is really turning over. for some of your viewers, there's anywhere from 30 to 50,000 yellow school buses manufactured every year in North America. And and we're seeing the increase of revenue go from about $2,000 a bus in some cases to $8,000 a bus, and that's because of the wireless trend. So the revenue is growing. Excited about that. New bus builds are still robust, and the technology is turning over, which is great, right? We recently became an Avigilon partner, and we're in the process of integrating with their command center. Being able to send streaming video back to their command center is something we want to be able to do, as well as look at working with them to add some other features. And what that does for us is it has the potential to open up their entire distribution system. And they've got about 5,200 systems integrators around the world. So I'm excited about our integration strategy with our technology. And that's just one example. There's a TTC spec for their trains out on the street right now. And the winner has to integrate with two things. Number one, you have to, and this is public, you can find it if you just read the spec. You have to integrate with Genetec, and then number two, you got to integrate with the supplier of the ACES program. Well, they wrote the spec before they awarded to us. We're the ACES supplier. So we're optimistic. We've got a good chance of winning that project, and we're going through the process now. But I'm really excited about 2025 and 2026 as we accelerate our go-to-market plan on the transit side and some of these new initiatives, with integration. So if you look at Genetec is a powerful player in the security industry. They're in a lot of big cities, and so if we're successful on the next leg in Toronto with this new RFP out, that means that our system has to integrate with theirs. And that then opens up potential of an integration platform with two of the major players in the security industry, right? So just looking at ways that we can partner with companies to such as a Genetec and a Avigilon to really drive new distribution models, right? And that's certainly something I'm excited about for 2025. And then I talk about the train side of things only because it's hard not to get excited about it when you're about to sign, when you've got your product spec'd in one of the major cities being SEPTA, and we're dealing with the train manufacturers, so we're close to coming under contract with them, and so we're in a really good, strong position there. So the focus is really on our execution on our go-to-market plan, and execution on our operational plan. Try to throw as much money to the bottom line as we can, while at the same time invest back into the business. It's a real balance, Paul, as trying to drive growth and capture land while showing profitability, right? And it's pretty easy for companies to slip back into loss situation, but Gatekeeper's done a pretty good job of keeping debt out, no dilution, and keeping a healthy cash position. And we've done that by having some good years of growth.
That's fantastic. Listen, I have to ask you the question around tariffs. Obviously, things have changed pretty dramatically since the new administration in the U.S. How are you guys affected by any of the tariff discussion right now?
Well, tariff in Canada, we're not really affected because materially, because we just don't sell an awful lot of products from Canada into the U.S. Our OEMs that we have, they are in different countries, and so we've had some exposure to Asian tariffs, but we've accounted for that, like, 3.5 years ago, right? And we're actually in the process of moving our manufacturer into a tariff-free zone, at least at the moment, right? But with President Trump, you never know where these tariff-free zones are going to be next week, right? So but at least at the moment, we're mitigating that the tariff that we've been dealing with for about 3.5 years. So we're looking forward to at least increasing our margin that has been taking a hit for about 3.5 years, right? So yeah, so that's the tariff is something that is difficult to predict, but I think we're in pretty good shape there.
Okay, why don't we tackle some of the questions that have come in? And there's a number of our members here that are very familiar with the business and some of the details. And one of the questions comes in from Jesus. It says, it's been published on CEO.ca that SEPTA contract of January board meeting has been canceled. Updated/amendment change order to be approved at February board meeting for a total of 2.392 million. Any comments around that?
Yeah, sure. So SEPTA was looking at issuing a similar contract that they did before. It's called a 3+2, and that's 3 years guaranteed, then option for year 4 and 5. And they kind of at the last minute just decided that they wanted to go with a 1-year extension. They just didn't have the appetite at the moment for 5. So that was really it. I mean, it's as simple as that. So they took it off the agenda, and they threw it onto the agenda for this month. So we're back on the agenda for board meeting at the end of this month.
Gotcha. Okay,
Yeah,
next question.
I could add a little bit of
Yeah,
color there if
sure.
you like, Paul. But,
Sure.
look, we've had a relationship with SEPTA since 2018, and like I say, managing video is really important to them. I think what they're looking at is because our technology now is a refresh, and they're moving towards wireless, and they're moving data back up into their servers with our software application on it. I think what we're going to see from them is they're going to they still need us to manage the video. They don't typically like to have union staff managing the video of incidents that are being caused by union staff. That's a conflict, right? So that's why they've subcontracted it, and we're an important piece to their business. We're not only dealing with a service contract, but we're also dealing with a number of other contracts that come up from time to time, right? So we've got boots on the street there that can support installation services and break fixes, and then we've even launched a new command center in the Bristol office that we're able to showcase to other agencies that are coming up to SEPTA to have a look at our technology. So that's just a strong account for us. And now it's I mean, it's taken some time, but I think because of the FRA ruling, we're starting to see more and more agencies reaching out to SEPTA to see what they've done and how they've met the FRA requirements, right? So nothing gets much better than your customer showcasing your technology to other people that need to buy it, right? So that's what's going on.
Exactly. Appreciate that. Okay, next question is, how big is the impact in Canadian dollars of the new mandate in Canada for school buses perimeter visibility?
Well, you're looking at almost a couple of hundred, right? So what's the total number? It's about 196 million over that period of time. So for Canada, and just that, by the way, that's just one product line, right? So that's a pretty good number. You're looking at potentially, once it gets going, maybe 20 million a year, right? Added on to just for that product. So I think that's a significant impact, and that doesn't include any of the stop arm camera systems that we have that we could be incorporating, or your traditional inside cameras, which is something that these districts budget for pretty much every year.
Gotcha. Another question here says, The award of the ACES pilot contract with Toronto Transit for 4 streetcars, does it have any optionality? Is this a new revenue opportunity, or is it just a standalone contract?
So for some of your newer investors, Paul,
Mm.
I haven't talked about this, but Gatekeeper's developed a cloud-based software application called TIMS, Traffic Infraction Management System, and it allows us to manage the evidence from the edge. So when there's a violation, like on one of these trains, we actually use AI to identify when there's a problem, i.e. somebody, maybe a vehicle in a sweet spot, and then we clip and push it back into the cloud, and then we connect with we match the license plate with the vehicle owner and issue a citation. For the Toronto Transit project, this is a pilot, and they're not going to be issuing any citations. So I see the potential revenue being twofold. Number one, there's the potential for this to roll out to all the trains, right? So I think there's about 263 trains. That's just for the ACES product, and then you've got the services, So let's not forget, right, that this $460,000 contract is for 4 trains only. It's a 9-month contract, and it's a services contract. We own the equipment, so when it's done, they'll make a decision, and we're providing a bunch of reports for them, so they're going to study how big a problem it is. They know it's big, but they want data that they can make a decision on to support a potential rollout for all trains. So it's got enormous potential, but it's not just Toronto. The fact that we've won Toronto, that news has now gone global, right? Because it's a unique application, and it just helps to build more credibility for Gatekeeper going into some of these deals where agencies need to meet either FRA or they're doing technology upgrades. Case in point, Miami-Dade was recently up in SEPTA. We took them through a tour. They're looking at our technology, and so we're just seeing more and more of that. And if you got number 6 and number 3 as far as largest transit agencies in North America, that's pretty good. And then we got another 60, smaller agencies that are on board now, right? So it's like Monopoly, like I feel like we've got a couple of good placeholders there, right? So we just got to keep at it, right? Keep building the technology, keep adding features, keep looking to integrate. I can't say what this next project potential is going to be because we haven't signed an integration deal yet, but it's with a major player in the transit market, and they want us as their video partner for all their train business, So they're in a lot of cities, So it's those types of partnerships that we're really working on to accelerate the growth of this business, because the deal flow can just be it can be quite enthusiastic, right? When I look at some of the projects in the sales funnel, like we got projects in our sales funnel that are anywhere from 2-3 million all the way up to 30 million, in that range. So I'm excited about the mix, not just the transit market in general, but the mix of the types of projects that are in transit mixed in with the K-12 market. It's really got a nice mix of some significant revenue projects with nice contribution dollars to the bottom line, along with a steady business that we've been in for many years, being K-12.
Doug, I mean, when you mentioned a $30 million contract like that, for example, do you feel comfortable you have the resources necessary to do some of these larger contracts? I mean, do you anticipate a need for more cash at some point? How do you look at sort of going after bigger projects?
Yeah, that's a great question. My main concern isn't funding the project, because the strategy I've put in place brings in our pretty large OEM vendor that we have on the hardware side, and they actually provide financing for us, project financing for us. So that's number one. Number two, then we get the inventory into North America, and we've got pretty good favorable LC in place with Toronto Dominion. So that solves that particular product or problem. The issue I have is it relating to balance sheet. So what you're talking about, I suppose, is our balance sheet strong enough for a tier one transit agency to issue a contract for in the 30-35 million range? That would be a concern, right? So hopefully I can answer that question for you and in the coming weeks or months. But we feel, I don't know, there's a lot of interest in us right now, and I just don't want to be doing any financing down here. So that's why we're working hard to strengthen up the balance sheet and put us in a strong position to deal with this. This particular project that we're referring to, and it is right in our sweet spot. And what I mean by that is it's got the same profile as our work in SEPTA, so we're really optimistic that we're going to be in a strong situation there. So hopefully, knock on wood, hopefully we're having a different discussion here in a few weeks, right?
I mean, that's you partly answered one of my next questions. Just in the event that you've got a large amount of or an infusion of cash, what's the best use of that cash? I mean, it sounds like in a case like this, it's just having that cash on the balance sheet to satisfy the bigger guys that you can deliver. But is there another use for cash? You want to spend more money in R&D? Are there M&A opportunities? What else could you do with cash at this time?
Yeah, that's a great question. We were flush with cash. And last year we had big second quarter and then but because the second quarter was big, the cash was down a little bit. It was not like it was alarming at all, but then I could see the cash turning in the third quarter. So we invested it, right? We need to invest cash. Can't sit on cash. You have to invest it, as you know, right? So we need if we're going to be integrating with some of these two of these platforms that I mentioned, we'll need to definitely hire a few more engineers to make sure we accelerate that. That'll be part of the a use of proceeds with cash. And then we need more salespeople, right? Like, we need more people out at the pointy end of the stick driving revenue, so that's certainly part of it as well. And with these two, with integration with some of these platforms, that could drive a need for more of a global push, so you could see us start to, have some specific hires that are delivering the technical requirements to the systems integrators that could be pushing our platform out there, right? So, yeah, so that's part of it. We don't invest in real estate. That's not part of our strategy, right? So we won't be doing that. We like to invest in the technology and people. And as we grow, we're probably going to have to add, some senior managers. I'm pretty light in that area. I'm still running the operations side of things, and we don't have a COO, and so there'll be a few hires when the cash when the time's right.
I guess sort of in question around that, challenges, like what sort of keeps you up at night right now?
Donald Trump. He keeps me up at night. Yeah, I think he's keeping a lot of people up. But I think the thing keeps me up is just just what can we do to streamline things? Like we're making some investments in our business that are on the operations side to really to bring software applications together into one application to make ourselves more productive. It's and I think the thing too that keeps me up at night is is it's the excitement. I know that we can find, good people to manage our projects if we're successful. And I believe we're going to be. So we're doing a little bit of a forward push on that right now. Like we've already hired a couple of project managers in anticipation of winning some of these projects. So yeah, when you say what keeps me up at night, I think it's just about everything. The currency, I'm not happy at all with our stock price. I look at what some companies have done to bring in to do financings maybe at lower levels, and there's no guarantee that that's gonna work. Although it's worked for some companies, they get the institutions involved and the timing's right on the revenue, so they bring the cash in, they're investing, and the institutions just plow in and get their allocation, and that can change a market cap. So that's probably out of everything that I'm dealing with, that's probably one thing that kind of keeps me up, is what's going to be the best strategy for Gatekeeper to increase our market cap, right? Because I feel we're undervalued here, and I've always believed that performance will always drive that eventually. And I feel like if we can land some of these deals that we're working on, we could get a re-rating, right? And so I know I'm talking to all the right people. I probably could do a better job of talking to retail, but it's there's a list of institutions that I'm talking to and research analysts, and so I can feel like, for the first time probably in the company's history, we've got more of the right people we're talking to. And that's not just in Canada, that's also in the US, so I think we've got a lot of eyes on us, and we can start to execute on, some of the deal flow that we've got in our sales funnel, get that news out, then hopefully we start to see, some of these people with appetite coming in.
Would you ever entertain the idea of buying back stock with some of your cash?
Yeah, funny you say that. I just had that conversation this morning, right? So I'm going to be the next board meeting, we're going to be talking about that, right? Does it make sense to start to buy back stock and send a message, right?
Yeah, exactly. Good. Okay, another question came in from HO here. It says, what percentage of the installed MDCs are turned on and providing recurring revenue?
Right now, we're going to be pushing here shortly about 3,000 of them delivering revenue. Yeah, pretty soon here. We're at about 1,400, and then there's going to be another batch that's coming on, and of course that'll increase as we move forward. Yeah, so that's
But is that all of them that are installed, or is it just a percentage that's currently sort of installed but turned on?
Yeah, that's actually installed, signed contract, and delivering revenue.
Gotcha.
Right. Yeah.
Gotcha.
Those are the ones that, like I said, we'll be up to about 3,000 here shortly. We're at about 1,400. And what can happen is that we'll sign recurring revenue deals, but then we haven't got the install done because we're waiting for schedule of buses. So there's going to be a little bit of a latency there from the time we sign the contract to the time we actually, start billing, right? But yeah, so I really like this business model, really do. It allows us to not necessarily give away the equipment and have, but so we're able to pick off the revenue for the system, which can sometimes be, significant, and then come in and really start to layer on. This is only the first phase, the health check and live streaming of video is really only the first phase. I want to start to get into other types of services in the future, which is more around video management and incident management and evidence management, because we're already looking, when you're doing health check, we'll have an operator that's actually looking at a particular inside the bus from a remote site, right? And we've seen issues with drivers and that we clip video and send it back to the transportation director and said, look, we're only checking on the health of the system, but you might be interested in this. Here's what we found, right? And, so then, so they're really appreciative of that. And, and I just think there's a big opportunity in the future for data management, right? So we got to get again, I'm on my soapbox again, but we got to get as many of these out there and then turn them on. And then the other thing that's happening, Paul, is that we're already, like, if you look at SEPTA, we're already, 2018, I guess we started installing product, right? So we're already 8 years in, so we're going to start refreshing, that technology. It's just, it's going to happen. They're already talking about, a refresh program for their existing recorders. So, yeah, I mean, it's the system sale is an important component to our revenue, and the recurring revenue is equally as important.
What's the competitive landscape look like in Canada versus the US? I mean, the Canadian contracts you're going after right now, do you see a different set of sort of competitors, or is it kind of all the same in North America?
Yeah, there's one smaller competitor that sells a really inexpensive system, and we're not gonna bother worrying too much about that. But the two main competitors in Canada are Sion, which is owned by Safefleet, and this will be interesting to see because they would be considered a U.S.-based company now, right? They're owned by a U.S. company. And the mayor of Toronto just, I think it was the mayor. I don't think that U.S. companies are allowed to sell product into Ontario. I'm not quite sure where that's at, but so from a high level, the competitors in the K-12 side, there's not too many competitors in the Canadian market, but the business is quite a bit smaller, right? This new law, this new mandate by Transport Canada has the potential to change that. And we're gonna have a heavy focus on that piece of the market. But in the U.S., by the way, in Canada, the train and transit business is a little bit different. There's more competitors that will come up from the U.S. because some of the projects are larger. But in the U.S. market, there's about 6 competitors, solid competitors in the K-12 market. And some of those companies in the K-12 will move into the transit market as well. What you don't typically find is a company like Gatekeeper that is actually in both rubber tire and steel wheel. Steel wheel is more of you have to have some expertise in that area. And in 2017, 18, when we first started doing business with SEPTA, we quite frankly, we weren't all that experienced. In fact, we didn't have any experience. We've learned so much from, FRA rulings and 105.5 standards. So we're a lot stronger in that business today than we were when we first started. So you typically just don't see companies, doing both. They're either in the steel wheel because there's specific requirements, or you're in rubber tire. So we are, we're doing both.
Gotcha. And then the last question I'll take from the audience here. Have you thought about expanding outside of North America?
Yeah, the strategy there is going to be through integration. Like I wouldn't want to build out what we built out in North America because it would be quite costly, right? But to do it on the backs of, like, integrate with the companies I talked about, right? If we can get integration packages done where we're bringing mobile and fixed site surveillance together, then anywhere where you've got a vehicle, anywhere in the world that has systems integrators selling fixed and mobile, they'll have that bolt-on piece, so that to me is a good strategy. So that's one piece of it. And then the other is on the, getting into the train OEMs, getting into their catalog, getting engineered into their systems or into their trains, and then going after the new train business on the backs of the OEMs. That'll be part of the strategy as well. And like I say, we're we are working with Alstom and close to signing contract with them, and just starting to talk to Hitachi. I can mention them because those are public. Those are already been made public by SEPTA, and Gatekeeper is spec'd at SEPTA. So they have to deal with us, right? And that's the best position to be in, right? So we worked hard to get there.
Mhm.
Yeah.
That's awesome.
So that's the strategy is global approach on with systems integrators because of this integration with CCTV and security, and on the backs of the OEMs, the train OEMs.
Yeah, awesome. Doug, so us investors, we're watching the company right now. What do you think are the most important metrics or catalysts to sort of keep our eye out to see how you're succeeding?
To keep an eye out, I'd keep an eye out for some news flow, right? I'm hopeful that that's going to be coming down the pipe here, which is soon. That's one thing to look for. We're a company that doesn't, as you know, we don't typically put news out every time we get an order because we're dealing with a lot of orders, right? We'd have news releases coming out 5 times a day, so yeah, I said, that's it. I mean, I feel like we've got the tariff thing. If I could say we have it under control, I've got it under control today, right? I'm not necessarily too concerned about it because as unpredictable as Trump can be, I don't think that even if he slaps tariffs on every country, I think it's going to be reasonable in the sense that we'll be able to increase prices and still stay competitive, right? And again, I want to reiterate that we really don't have an impact from Canada, like Canada into the US. That's not impacting Gatekeeper in any material way.
Gotcha. And then lastly, Doug, I don't know what we missed, but is there any sort of key message you want to make sure everybody walks away with today?
I think the message is that number one, the CEO still believes we're undervalued. We've been up and down. It's a crazy, it's kind of a crazy time. We put our best year out, and our stock got hit pretty good. So who knows with these markets, right? But for people that are selling, that's a good buying opportunity. Look, you've known me for a long time, Paul. Nothing has really changed here. We're going to continue to grow this business fundamentally. And what's kind of changing, and I'm going to reiterate, what's changing fundamentally is the things that we've done in the past are, from a product strategy and quite frankly, our IP, a lot of our IP is trade secrets, just our know-how, being able to execute on these projects. They're just getting larger, and I was talking to my VP here today, Jeff Grubin, and his feet are just off the ground. Like what his sales funnel looks like today compared to what it looked like a year ago it's completely different. So we got to get some of these things in the hopper, and those are those are things that your investors hopefully can look forward to here in short order.
And Doug, what's the end game here? Like so many companies in your kind of space get acquired at some point. Do you see that as a possibility one day, or are you guys just gonna be the acquirer?
Yeah, I've been giving some thought to that. I'll be surprised if one or two don't take a run at us, especially with what just happened at TTC. I think I know who we beat there. And I wouldn't want to be having breakfast, eating his cornflakes to see that press release come across the table if I was the CEO, that's for sure. But look, that's a little Canadian being cocky, I guess, right? But yeah, the end game is look, we just keep growing. There was a real good friend of mine years ago said to me, look, just don't put your company up for sale, just build a great company, and people come. So that's what we're doing. one of the things we will look at, soon enough is potential acquisitions. That's we're really successful with what we did down in Philadelphia, and that'll be part of the investment that you talked about earlier. What do you do with your cash, right? Well, if I can look to bring a senior operator in here that knows our business, it'll free me up to start to really kind of put a tight team together to go look for that that next acquisition. And in our space, there's a number of companies that are smaller, but they've either got something unique on the software side that's recurring revenue that could be integrated with us to create a more rich solution for our customers. Or they could just be a standalone piece of technology that we may want, right? So I want to accelerate that part of our business. But when you're dealing with the things that I'm dealing with now, we really need to we've got to strengthen up the balance sheet so we can afford to make the investment and then free the resources off to really accelerate that piece of it. But that's something that we really haven't done in the last several years. We've been more focused on the organic growth in these tough market conditions and just try to throw everything to the bottom line, right? And then smartly invest in the business, of course. But that piece of it is definitely something that I'm interested in because I think this, right? We acquired an asset for $300,000, only paid $190,000 for it. By the time you stripped off the reps and warranties, and we've turned it into now over 40 million in business. And those types of deals they can be out there if you know how to look for them. Some of them come with a lot of hair, which this one did, and we cleaned it all off and turned it into a nice shiny nickel, right? So that's definitely something that we want to be that we want to have part of our growth strategy here is leveraging up on acquisitions, especially if we get some institutional support coming in, right? Because I got to keep an eye on the organic growth. I didn't tell you this, but I didn't mention it, but I brought my team together in Semiahmoo this past summer in June, and about 35 of us, and we laid out all of the bottlenecks that we felt like we had in the company, to get us to that 100 million in revenue mark, right? And so we've got that plan in place, and now we've been executing on it this year. We've been investing in the business, so organically we feel like the TAM, right, the total available market is or addressable market is there's a lot of room for growth there, even though we got a nice pace going. So we got to continue to make those right moves on the operations side, on the people side, and make darn sure that our organic model is healthy, and that allows us to look at the acquisition model.
Awesome. Doug, you're right. I've known you for a long time. You've managed to, I remember at the time we met, your numbers were significantly smaller. They're significantly bigger now. So you've accomplished a lot in that time frame. So listen, continued success. Hopefully you can keep growing at this pace because it's been pretty phenomenal. We've been speaking with Doug Dyment, CEO of Gatekeeper Systems. And I really appreciate the time you've given us today and the update, Doug. Look forward to catching up pretty soon here.
All right. Thanks, Paul. Trevor, really appreciate it as always, and have a great day.
You bet. Bye for now.